Michael Carnaval is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnaval and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice. Hi everybody, it's another Conversations With, and as you heard, it's with my good friend Michael Carnaval. And well, Michael, October was a surprise a little bit.
Yeah, came and went. It was a very quiet month, really. Not much happened, but it ended positive.
Oh, yeah.
So,
I mean, it was up 27.
Yep, got to 27, dropped back a little bit. From start to finish, it only went up 25 points, but, you know, being up 16% for the year, that's okay.
Oh, yeah. I mean, once again, when you understand that that anybody who's participating in the market and has stayed the course is now up 16% for just this year.
For this year.
Well, you can't beat that.
Oh no, you can't complain.
No. I mean, it's you look back at the, by the time we finish the year, and the good news is we're going into the 2 strong months.
The strongest quarter of the year is the fourth quarter. Yeah.
And so we have every indication that we probably will come out well over 27 by the time it finishes.
Could be an all-time record.
Yeah, and I know yesterday they were all jumping up and down about the S&P.
Mm-hmm. Yeah,
it was a big record yesterday.
Yeah.
And so, it's, and then of course the Fed lowered the interest rate again.
Mm-hmm.
And I was telling you, I mean, they're giving cars away.
Yeah.
I mean, I made a deal this week with no interest.
Mm-hmm.
And the finance company is going to pay the first 2 payments.
What's wrong with that?
On a 36-month deal, with no interest, and then they're going to pay the first 2 payments.
Yeah.
And it's not a delayed deal like some of them are. They're going to pay out of the 36 payments, we pay 34.
Yeah. Yeah.
So it's I mean, they're begging you to take them.
Oh, they are. Well, there's so many makes and models that
and some of the dealers, they've got 2019s, and I got a notice the other day from Car Gurus that there's a dealer that's got 7 2018s, and he's got this fabulous deal on them, and you say, boy, go get it.
Going to have to lower the driving age.
Yeah, well, that's what's going to happen.
Yeah. So we take a look at. We like to start off with the the numbers, so to speak. Interest rates, although the Fed, we'll talk about that in a minute, cut rates during the month of October. 30-year Treasury actually went up. It was 2.13% a month ago. Today it's 2.18. So and that's probably a good sign. You do want to see longer-term rates increase a bit. Those technical indicators we look at, they weakened just slightly. The New York Stock Exchange 200-day moving average saw it rise to 63% from 62%, meaning right now 63% of the stocks listed on the New York Stock Exchange are above their average price for the past year. Anything between 40 and 70 is considered sort of normal, so a little on the high side there, but not bad. Volatility is down. That's not a good sign. You want to see a little more fear because the market tends to rise, on fear. That's at 14. It was 16 a month ago. So that's kind of a little bit of warning sign. And the other one is the stochastic oscillator, which kind of talks about momentum in prices over the past month. That's really jumped. It's at 69. A month ago, it was 36.
Whoa.
Anything over 80 would kind of signal the market be short-term overpriced. So you can see we've made a big jump, but still got room to
Yeah.
go. So nothing really on the technical side that really would cause any concern, at least in the short run, maybe the next month anyway.
Yeah. Well, I mean, and you know, when you realize we're knocking on November, and then we get Thanksgiving, and then Santa comes.
That's right.
And in fact, it was about a month ago, I went into to Michael's,
Okay.
and they had a bunch of Halloween and Thanksgiving stuff out. And then as I walked through they had a Christmas display already.
Oh, yeah.
So I asked the manager when they're going to put the Easter stuff out. I mean, Christmas is
Yeah.
out already.
Yeah.
In the early October.
Oh, yeah.
And he said, he started to laugh. He said, "You think you're kidding?" He said, "I got 10 boxes out in the backyard
Yeah.
that I have to unpack with dates on them that are all Christmas stuff." He says, "Within the next 2 weeks they'll be on the floor."
Well, I was, at the end of August, I was in a supermarket. They had Halloween candy.
Oh yeah. Oh yeah.
Yeah.
It's unbelievable.
It is.
And it's but that's that's what sells stuff.
It is. That's what gets people to make the purchase.
Well, and the other thing too, breaking news.
Yeah.
Now it's overdone, of course. I mean, they open up the newscast with 6 breaking
They
news
do.
stories, and I mean everything now is breaking news. But at the same time, we've especially in the market, we haven't really had breaking news that's dramatically affected the market. This Chinese deal with China and America on that Trump's playing back and forth, and of course you never know what's the truth.
Right.
He says one thing and China says another.
Right.
So obviously, one of them isn't telling the truth.
That's true.
But the market will occasionally get a little nervous about that.
But it only lasts a day or even less than a day.
Yeah, they're halfway through the day, boop, and
Yep.
then by the
Then
end of the day, it's green again.
Goes back up again. Yeah. Like we said at the start, not much happened during the month of October. The International Monetary Fund came out with their periodic assessment of global growth, and they've lowered it. Actually, they've lowered growth to the lowest rate since the financial crisis back in 08 and 09. And they kind of claim that, those trade wars that you had just mentioned between China and us as maybe being the cause of that. So if you could ever solve that, if they could ever get a deal, boy, that could really lift growth.
Boom.
Yeah, overnight.
Well, I mean, every other day they say, yeah, we're going to have a deal, and then China, we don't even know what he's talking about. So, you never and China has been basically growing and growing, although they've had a dip.
Right.
In the last 2 months, their economy is really slowing down. But there's a challenge for the United States.
Oh yeah, I mean the IMF said that next year they look at growth in the U.S. at 2.1%. That's a lot slower than the close to 3 that we've been seeing.
Oh yeah.
They said the two fastest growing countries, not surprisingly, China and India.
Yeah.
As being the 2 fastest growing next year. So we'll have to wait and see if that all pans out.
Yeah.
There's been talk about this global growth slowdown, and Germany cut their growth forecast for next year to 1%. And that's kind of important because, Germany's Europe's biggest economy, and it's the world's 4th largest. So when that kind of happens, you do have to take notice that things are slowing down.
Well, I had a deal with a Mercedes dealer, and I was talking to him. I said, "How's things?" He said, "Boy, they're not as good as you think." He said, "We're selling a lot more used cars than we are new cars, and that's Germany."
Yeah, that's right.
And so and the same is true as BMW. They're selling a lot more used cars. So he said to me, "I want Jen's car because I can clean that up and put it out, and I'll sell that a lot faster than I'm going to sell a new one."
Yep.
But new ones on average are 58, 59. Right. I mean, the C300, which was their little one, that at one time was $29,000, new, they're up to 63,000.
Yeah.
You know, I mean, Jen's got one that brand new was $59,400, and so it's a couple of years old, and you can get a good buy on it. But he said that they're selling more used cars than they are new cars, which directly goes to what you just said with the German economy.
Yeah, things are slowing.
Because there's their two big, Mercedes and BMW, is their big businesses, and they're struggling with new cars.
Yeah, because of the costs.
Well, we were on the floor, and there's one car with $98,000, and you say, who's going to buy a $98,000 car?
Yeah.
And he says, we really sell those to corporations, not to people.
Okay.
Like the guy, somebody will buy it for his company,
Yeah.
and it's the company car.
Yeah.
So the company pays for it.
Yeah.
I mean, imagine what the payment on that thing is.
geez.
You know, for 3 years.
Yeah.
You know,
Yeah.
and so, but he said they're not selling them.
Yeah.
They look nice.
You're right.
You know,
But they're sitting.
sitting. You know.
Yeah.
And he said, on the floor that day we were there, they had 11 cars in the showroom on display. They were all 2019s.
Yeah.
Wasn't one 2020 out there.
Yeah.
He said, "You don't dare put them out."
Yeah, they got so many leftovers.
He says, we don't want to. We want them to take these. You know, but to your point,
Yeah. A lot of countries' central banks met on interest rates during the month of October. We know the U.S. cut their rates, but also Mexico, India, and Turkey cut interest rates.
Right.
Europe and Canada also met. They decided to do nothing, keep rates where they were. So you can see the trend continues that interest rates are going down.
Oh, there's no question about it. And what's going to start to happen? Eventually, it's going to get to the mortgage rates, and they're going to start going back down to 3, in the 3s again.
Yep.
And that should cause a boom for the real estate
Well, it
industry.
should help it.
Yeah.
Yeah, yeah. You know, we've talked about the Dow. Really didn't do much in October, but there was a headline where Ron Barron, he's 76 now. He's a hedge fund manager, a billionaire hedge fund manager. He's worth, I don't know, about $3 billion. He predicted in the next 50 years, the Dow will hit 650,000. So, of course, that's a headline.
Yeah.
You say, wow. A lot of us won't be around in 50 years, but somebody will be. That only works out to 6.5% return per year, less than the long-term average, which has historically been about 8%. So you can see, you know, we're at 27,000 now. You know, when it was 6,600 10 years ago, we could have never guessed 27.
No.
Just like today, we can never guess it will be 650,000.
Yeah.
But it just goes to show you that, you know, the growth of the U.S. economy, you know, it's second to none.
Well, you know, the situation is this. Even though President Trump is trying to do everything he can to keep people out of here, you know, they're still coming.
They still want to come here.
That's right.
Right.
Yeah. And our country is amazingly diversifying, and it's diversifying itself.
Yeah.
You know, it's just unbelievable. I mean, no matter where you go, you go in and you see. I'll give you an example. I go down maybe 4 times a year to the outlet down in Rentham. They now have their announcements in English, Spanish, and Japanese, and Chinese. And when they read an announcement, they do it in 4 languages.
Yeah.
In the mall itself.
Yeah.
So, and you see that there's Chinese people, Japanese people, especially you go in the Coach store, which is, you know, women's handbag.
Yeah.
And of course they shop ruthlessly. They have no what do I want to say, skills. Like you'll pick up a handbag and they'll take it out of your hand if they want it. They'll say, "Well, let me see that."
Yeah.
And they walk right over and take it out of your hand.
Yeah.
And Jen's had it happen to her. You know, she went to pick one up and lady cuts her off and says, "I want that."
Yeah.
Grabs it. And Jen, whoop, you know,
Yeah.
and then she takes the next one. It's there. You know. But they shop like that.
Oh yeah.
But they'll go out and they'll have a bag full of, they'll have 5 or 6 purchases. You know, so they'll spend $800.
Yeah. Yeah.
And when they go out, you can. And Jen's got her one bag. She gets one for the seed, for each season, and she'll get her a new bag. But they go out with 5.
For 5 of them. Yeah. Yeah.
So you got to give it, and they're here, and they have big jobs.
Oh yeah. Oh yeah.
I mean they have a lot of IT jobs.
Yep.
And they're making great money.
And that's the hot field now.
Oh yeah,
You know?
it certainly is.
I mean, it rotates from sort of generation to generation, decade to decade, and that is definitely the high
end.
high field right now.
And there they are, and you go there, and I mean you can tell by the cars,
Of course.
by the vehicles.
Yeah.
There's no Ford Escapes.
No, no
don't see
domestic
any of those. No
vehicles.
they're all Volvos. They do a lot of Volvos, and of course you see a lot of BMWs.
Yeah.
And you see a lot of Mercedes.
Yeah.
Yeah. So it's interesting. It really
Yeah, it is. It is.
And as busy as they are, every time you go, there's an empty store. Somebody went out.
Yeah.
Somebody didn't make it.
Didn't make it. Yeah.
And you can see the coming soon.
Yeah. Yeah.
But I mean, it fills right up. There's always somebody waiting to win.
Who wants to get into
Yeah.
that location. Well, we just finished up the World Series, and so we have a lot of good news there.
Oh, that's exciting.
It was between, we know now, between Washington and Houston. And Washington, kind of convoluted history. They've been in a Washington origin team has been in the World Series more than a lot of people think. Because in addition to the old Washington Senators, they were the Minnesota Twins, the Texas Rangers, the Montreal Expos, and now the Washington Nationals. Whereas Houston really has just been themselves since they came in the early 60s. So in years that a Washington team won the World Series, the following year the Dow was up 16% on average. The year that a Houston team lost the World Series, the following year the Dow was up 15%. So we know now Washington defeated Houston.
You know what was amazing about that? Washington won the 4 games in Houston, and Houston won the 3 games in Washington.
No home team won a game.
No.
Unheard of.
Unheard of. Unbelievable.
Yeah.
I mean, when I saw that they won the first 2 games, especially in Houston.
Yep.
I mean, Houston, that's their ballpark. They don't lose there.
No.
I mean, their home record is usually, 60-2 or something.
Yeah. Yeah.
They lose very little in home.
Yeah.
And they lost. Washington beat them twice there, and then the last 2 games. And then Houston won the 3 games in Washington.
Yep.
Because I thought after the first 2 games, Washington would sweep them.
It looked like it was over.
Yeah.
You're going home for 3 games. You got to win maybe 2 of them.
Yeah.
And it's all over. But it didn't happen. And so interestingly enough, we know there's no direct correlation, but between obviously baseball and stock prices. But we like to fantasize here. Based on the World Series historical result, the next year the market should be up 15.5%. That'll put the Dow at 31,400.
Wow.
Imagine that if it could come true.
Yeah. Well,
We heard it here first.
we heard it here first. There you go.
We heard it here first. Another thing we entered today, the saying of sell in May, come back Halloween Day.
Yeah.
Well, we're taping this on Halloween Day, so got to get back in the market. Since 1950, between May and Halloween, only 4% of the total return of stock market gains have occurred during that period.
Wow.
96% of all stock market gain has occurred from November to April. And that kind of panned out this year. The last 6 months, May to today, Halloween, Dow is up 2.2%. So that's annualized at 4.4%. But the Dow's up 16%. So we're coming in not just the next 3 months, the fourth quarter is the strongest quarter, but the next 6 months, historically very positive when compared to the other 6 months. So we could be entering a period that, again, could surprise a lot of people. The market may go a lot higher than people think.
Yeah.
Yeah.
I mean, you and I sit here, and we did programs when it was 6,600.
Oh, yeah.
And we were gasping, when's it going to be 7,000?
Yeah, yeah.
And here we are now chuckling at 27.
Yeah, And then we got excited at 10. Then
Yeah.
we only dreamed that we'd get to 20.
Yeah,
Now we're at 27.
yeah.
You know?
I mean, it's unbelievable. In fact, it really is.
It
If you
is.
look back at it, it's been an unbelievable growth track.
It really has been. Yeah.
And you know, there's a tragedy in it too. It left a lot of people behind.
It did. It left a lot of people behind who can never
Who
make
panicked?
that up. Who
Who
panicked.
panicked and grabbed their money and pulled it out.
Yeah.
And they'll never. There's nothing they can do.
No.
I mean, I remember my good father-in-law. He took a lot of his money out. I said, Ernie, you're making a mistake.
Yeah.
I look at Dick. I can't take a chance on that.
Right.
Okay, and he was excited because one of the banks he does business with, he got 4%.
Yeah.
And because I'm sitting there, and he says I got 4%. Then he gets a letter. Gets a letter that they're gonna cut it. They're gonna cut it back to 1.5%.
Yeah.
Oh, he's furious. Now he's got nowhere to go.
Yeah.
You know, so there's a downside. As lucky as it is,
Absolutely.
for those who just left it alone, and enjoyed the growth.
Right.
There are those souls who, and most of them didn't listen to their advisors.
A lot of them didn't. They did get out.
Yeah,
And I'll be honest, you know, we stand here at 27,000. If you said 10 years ago or 12 years ago, yeah, but you never knew it was going to do that. I would say absolutely not. Had no way of, how
no,
could you?
How I never knew.
The-
But the one thing that you always said was, it'll come back.
Right.
It always has.
Right.
It'll come back. It always has.
Right.
Now, so in your own way, you were a predictor of things to come because it came back, but
Yeah.
it came back stronger than anybody thought.
Could have dreamed of.
Yeah.
And the key is...
And that's includes Jim Cramer.
That's right. That's right. And the key is not to bet against, long-term betting against the U.S. economy is a losing game.
Yeah.
And that's really all we were doing. We were betting that
Well, you know,
the economy is going to
You know,
survive.
my father used to say all the time, whatever you do, never bet against yourself.
Yep.
And he says, he used to make fun of people who bought flight insurance. He says, you're betting the plane's going to crash.
Yeah.
And what do you mean?
Yeah.
My father would say, you're going to buy that insurance, all right? And you're going to give it to your wife or your kid or whatever you're going to, and you're going to get on the plane. And if it crashes, you're going to be dead. So you can't get the money.
Right.
Somebody else is going to get it.
Right.
And then you're betting against yourself.
Right.
I'm so convinced that plane's going to land safely, I don't need the insurance.
Yep. Yep.
And he says, I wouldn't bet against myself.
Yep.
You know, so
Yeah.
to your point.
And
you
the
know,
things that we heard 10 years ago, we're hearing today. Oh, it was, oh, can you believe Bush? Oh, can you believe Obama? Oh, can you believe this one? Oh, can you believe Trump now? And it's the same thing, and it doesn't matter. It's the politics of it doesn't matter.
no, it doesn't. And the guy who's at the top, who becomes the warden and takes the bows,
Yeah.
you know, it had nothing to do with
Had
it.
nothing to do with it. It's just a luck.
That's right.
Luck that it
That's
happened.
right.
And I mean, the thing I always try to say is, you know, as kind of corny as it might sound, through history, the stock market makes all-time highs. It doesn't make all-time lows.
No.
And, you know, if you're following just some simple economic stuff, it can kind of control the emotions so that you can stay in,
Yeah.
you know.
Well, I think that's the biggest issue. You know, if you get too emotional,
Right.
you got a problem.
Right.
You know, you just leave it alone.
Right.
And if it's a tough month, and you don't look at it.
Right.
You know? And by the way, it's only paper. It's a piece of paper. You know, it's not real money.
Right.
It's a piece of paper.
Right.
You know,
Right.
so you gotta sort of ride with the tide.
Ride with the tide, as long as, you know, the economic stuff still stays positive. We'll look at the four items that we always look at every month, and you'll see in a minute or two, nothing's changed. Inflation, for September, consumer prices and producer prices, you know, continue to be well below the Fed's target of 2%. So you don't have the fear that inflation is going to start to
No.
erode the value of money. Leading economic indicators a little on the weak side, but still, you know, about where they were
Yeah.
the last 6 months. So a little deterioration, but nothing alarming there. Jobless claims, people still continue to keep their jobs. We've had 243 straight weeks that layoffs have been below 300,000. That's unbelievable. And long-term unemployment has been under 2 million for 131 straight weeks. We're at the lowest level of job loss in 50 years. This, with the size of the labor market, twice what it was 50 years
I
ago.
saw a thing yesterday that Massachusetts has a problem. We have more job openings than we have people looking for jobs.
No, the whole country is in that
And
position.
Massachusetts, some of the companies are struggling because they can't get help.
Mm-hmm.
There's not enough people looking for jobs
Yeah.
to fill the ranks.
And the people who are leaving, they're getting countered by their current employer. We'll raise your pay
Oh
if
yeah.
you stay.
Oh, they'll do anything.
Yeah, yeah. The employment report, the jobless claims, that's an indicator of people who are losing their job. The employment report is how many people are getting jobs. September was a little weak. Economists say that you need about 150,000 new non-farm jobs a month to grow. In September, it was at 136,000. So there's no doubt things are slowing down, but still growing. Unemployment's at a 50-year low. More people are entering the labor force. In the month of September, 117,000 new people started looking for a job. That was after August's 500,000, which was the best of the year.
Yeah.
So it's still bringing in people. People are still positive. History shows people look for a job, think they can find one. So the fact that after a very strong August, more people came in again in September, that bodes well for the economy.
Well, I get the ARP bulletins all the time, and they pointed out that people who have retired are now coming back in. They're desperate to get people, so that they're bringing people back. Some of these companies who retired, begging them to come back in because they desperately need them, and of course they know what to do.
Yeah.
They don't need to train them.
Right.
And so people who are 68, 69 years old who retired are now going back, and some of them are working part-time, some of them are working full-time, and it's been great for people who are in there, retired or mature citizens now going back to work and earning good
money.
good money.
Yeah. Oh, yeah.
So it's interesting.
So now we enter November. What can we expect? Well, since 1950, November's been the third best month of the year. It's been up 2/3 of the time. The last 3 Novembers have been positive, as had 6 of the last 7. So, we're sitting here at roughly 27,000. We're about under 400 points for an all-time high. If history repeats itself, sometimes it does, sometimes it doesn't, but if it does, we should see a new all-time high for the Dow sometime in November.
Yeah.
Yep.
And then we go into December, which is another strong
A
month.
very strong month, end of the year.
Yeah.
Yeah.
So-
We keep saying it, but there's nothing out there, at least on the economic front, that would say things are going to change.
And of course, then we have the Patriots undefeated.
That's true.
And everybody's saying, well, they didn't play anybody yet. Well, as Tom Brady always says, it's very difficult to win a game in the National Football League.
Yep.
And anytime you can win, they say, we haven't played anybody. Well, they're 8-0.
Right. Right. Right.
So,
Yeah.
they're sure they haven't played anybody, but they're 8-0.
Right.
So,
Right.
who they did play, they defeated.
That's right.
And they still have, they're still highest offense. They're averaging 31 points a game, and they have the stingiest defense, who's averaging 7 points a game. So they're beating people 31-7.
Yep.
Okay, and everybody's now they're going to play the Ravens. That's going to be real tough. Well, every game's tough.
Yeah, they're all professional teams.
Yeah, like Brady said. And then the biggest problem they have, and I went through it in high school because we were undefeated my junior year, so everybody wanted to beat us. So it didn't matter who we played, they came to beat Malden. Well, the same was true with everybody wants to beat the
Sure,
Patriots.
they want to be the ones that knock them off.
Well, knock them off.
Yeah.
So every game is a challenge. As we saw with the Browns. And the trouble with the Browns is they buried themselves in the first, it was 17-0 at the end of the first period.
Yeah.
And but But then the second period, they started to go. And then, of course, there was a big story I saw yesterday, Belichick, the genius. They had him mic'd,
Okay.
and he called the defense together and told them what was going on, and that was the end of Chubb.
Yeah.
You know, they told him, hey, you got to do a bit. You watch this, and he's showing them, you know, and you see him on the sideline making little notes.
Yep.
And he put a new plan together right during the game, and they shut them down. And that's their strength.
Yeah. Oh, yeah.
So, well, we sit again, and we're sitting in 27,000 territory.
You know, we're looking to be in good
And there's
shape.
no indication that the world's coming to an end yet.
No. I think all the news, all the day-to-day news of impeachments
Oh, yeah.
and trade stuff in North Korea and stuff has had no effect.
No effect whatsoever.
No.
No.
It's just
So,
politics.
just very positive.
Yep.
Well, Michael, we come to the end of another month and another show.
Yep.
Thank you very much. It's been great. And folks, that's another Conversations With, and we'll see you soon. Thanks for watching.